Here's a summary of Amazon's Q1 2026 earnings call transcript. Overall financial performance. Amazon reported a strong first quarter of 2026 with $181.5 billion in revenue, representing a 17% year-over-year increase, 15% excluding foreign exchange fluctuations. Operating income reached $23.9 billion, achieving an impressive 13.1% operating margin, the highest in the company's history. Key financial metrics and highlights. AWS growth accelerates. Amazon Web Services, AWS, demonstrated remarkable acceleration, growing 28% year-over-year, its fastest rate in 15 quarters. This growth added $2 billion quarter-over-quarter, marking the largest Q4 to Q1 AWS revenue increase ever. AWS now has an annualized revenue run rate of $150 billion. AI driving AWS and beyond. The company highlighted the explosive growth in AI, with AWS AI revenue run rate exceeding $15 billion in its first 3 years, a nearly 260x increase compared to AWS early days. Customers are choosing AWS for AI due to its broad capabilities, e.g., SageMaker, Bedrock, the proximity of their data and applications, and its superior security and operational performance. Custom silicon momentum. Amazon's chips business is experiencing rapid growth, with an annual revenue run rate exceeding $20 billion and triple-digit percentage growth year-over-year. The company estimates its custom silicon business would be a $50 billion annualized revenue run rate business if sold externally, making it one of the top 3 data center chip businesses globally. Trainium and Graviton chips are positioned as key differentiators for AI and CPU workloads. Stores unit growth rebounds. Unit sales in the stores segment grew 15% year-over-year, the strongest performance since the end of COVID lockdowns. Grocery business expansion. Amazon's grocery business continues to grow rapidly, achieving over $150 billion in gross sales in 2025, making it the second largest grocer in the U.S. Perishable sales have grown over 40x year-over-year. Amazon Ads strong performance. The Amazon Ads business generated $17.2 billion in revenue, up 22% year-over-year, with continued strong growth across its full-funnel offerings. Prime Video's profitability. Prime Video is now described as a large and profitable business in its own right, a key driver for Prime member acquisition and retention. Operational efficiency. Fulfillment network performance improved, with unit growth outpacing the cost to operate. Outbound shipping costs grew 12%, and fulfillment expense grew 9% year-over-year, FX neutral, indicating improved efficiency. Significant capital investments. Total company capital expenditures in Q1 were $43.2 billion, primarily driven by AWS and generative AI investments to support strong customer demand. Management's forecasts and future outlook. Q2 2026 guidance. Net sales expected to be between $194 billion and $199 billion. This guidance assumes Prime Day occurs in Q2 in most major geographies, with a note that Prime Day timing shifted from Q3 in 2025 to Q2 in most countries for 2026. Operating income expected to be between $20 billion and $24 billion. Long-term AI investments. Amazon is confident in the long-term capital expenditure investments being made, particularly in AI, viewing it as a once-in-a-lifetime opportunity that will drive significant future revenue and free cash flow. Amazon LEO potential. The company is very bullish on Amazon LEO, anticipating it to be a very large, many billion-dollar revenue business, with strong free cash flow and ROIC characteristics in the medium to long term. The acquisition of Globalstar is expected to accelerate direct-to-device capabilities. Significant risk factors. Macroeconomic conditions. fluctuations in foreign exchange rates, energy prices, global economic and geopolitical conditions, tariff and trade policies, customer demand and spending, including recessionary fears, inflation, and interest rates, can impact results. Resource and supply volatility. Volatility in resources and supply, including memory chips, is a factor. Technological and competitive landscape. The rapid pace of technological change and competition, particularly in AI and cloud services, presents ongoing challenges. Execution of AI strategy. The successful development and adoption of new AI products and services, and the ability to monetize significant capital investments are critical. Capital expenditure management. While investments are seen as opportunities, the timing and monetization of these large capital expenditures are crucial for free cash flow. Highlights: AWS accelerating growth and market leadership in AI. Strong performance of custom silicon, Trainium and Graviton. Rebound in stores unit growth and expansion of the grocery business. Robust growth in Amazon ads. Record high operating margin. Successful integration of AI across various business units, including Rufus for shopping and agentic tools for sellers. Expansion of Prime Video's content and profitability. Lowlights. The transcript does not explicitly mention lowlights in the traditional sense. However, the significant increase in capital expenditures driven by AI investments will challenge earlier free cash flow until these investments are monetized. Most important statements from CEO and CFO. Andrew Jassy, CEO. We are reporting $181.5 billion in revenue, up 17% year over year. Operating income was $23.9 billion. Q1 was a strong quarter for Amazon.com and, starting with AWS, growth continued to accelerate, up 28% year over year, the fastest growth rate in 15 quarters. We have never seen a technology grow as rapidly as AI. AWS customers can build agents with their proprietary data in strands. Customers can deploy agents with enterprise-scale security and reliability with Agent Core. Nobody has a better set of chips across AI and CPU workloads than AWS with Trainium and Graviton, and we are unusually well positioned for this AI inflection. Units grew 15% year over year, the highest we have seen since the tail end of COVID lockdowns. We are in the middle of some of the biggest inflections of our lifetime, and Amazon.com, Inc. has the culture, the know-how, and the resources to make so many customers' lives better and easier. Regarding internal AI use, I do not see a place in any of our businesses or any of the ways that we do work where we are not going to have giant impact from what we do. Brian Olsavsky, CFO. Worldwide revenue was $181.5 billion, a 15% increase year over year. Worldwide operating income was $23.9 billion, with an operating margin of 13.1%, our highest operating margin ever. AWS segment revenue was $37.6 billion, and growth accelerated 480 basis points to 28% year over year, driven by both core and AI services. Our AI revenue is growing triple digits year over year. Q2 net sales are expected to be between $194 billion and $199 billion. Q2 operating income is expected to be between $20 billion and $24 billion. I am thankful to our teams across the company for their hard work and dedication to customers. We remain focused on driving an even better customer experience, which is the only reliable way to create lasting value for our shareholders. This summary aims to provide a comprehensive yet concise overview of Amazon's Q1 2026 earnings, suitable for public consumption.